Okay, if everyone could take their seats. I think we're nearly ready. The jazz music has been cancelled. Okay, well, a very, very warm welcome to a chilly autumnal day to the ProVen VCTs shareholder event. Just some housekeeping notes to start with. You'll have all been given a ProVen goodie bag, and in there you should see an agenda and a note and pen to write your notes and your detailed questions, some mints to sustain you through to lunch, and some vouchers from some of the portfolio companies for you to think about gifts for Christmas. And lastly, and most importantly, a feedback form that we ask you to fill in before you leave. And as a special inducement this year, there's a Fortnum & Mason hamper if you hand in your form, and that will be drawn after the event. I've also been asked by the administrators here just to notify you that, just to notice where the fire exits are, and if a long continuous alarm sounds, to leave the building. I'm sorry I have to announce this, but if you leave the building and gather on the front here in Somerset Place. The other thing I wanted to mention was all of the Beringier people and directors have a little name tag. Though we have a Q&A session, which is longer than last year, you please feel free to collar us at lunchtime and ask questions. And for that matter, any time during the year, we're always open to your questions, but specific questions probably better over lunch. Okay. The purpose of today is to enable you to get a better understanding of your investment in ProVen Growth and Income and ProVen VCT. And it's an opportunity for you to get to know the board members representing your investment and also the team managing your investment, and to find out how your investment is doing, what we've invested and what investments we've realized. And the agenda that we set out, it endeavors to do that. It's broadly unchanged from previous years, but this year we decided to drop the guest speaker. I know that might be a little bit controversial, but we had feedback last year suggesting that it was not particularly relevant and it went on too long and time would be better spent on commentary on the VCT. And so we've endeavored to spend more time on the VCT this year. I want to start today with a broad review of the year. The economic backdrop that the VCTs have operated in has been pretty benign, actually pretty good, with almost full employment, low interest rates, but with some potential markers for a slowdown in the economy. Obviously, stock markets are down over the year, and growth is lower this year, 1.3% compared with last year, though I noticed the Chancellor suggesting that growth will pick up. It's not that evident with other forecasters. So what's the reason for this uncertainty? Well, most obviously, when you have the two largest trading nations locked in trade war, it's going to have some impact. And closer to home, we have Brexit, obviously, that is causing consternation and concerns over investment. But I wanted to cover some of the things that are really affecting our portfolio in a bit more detail. And these are the market trends going on, particularly in technology. Yes, I forgot to say, don't forget to turn off your phones. And the most obvious thing is valuations. And it's really interesting. FANGs, as they're called, Facebook, Amazon, Apple, Netflix, and Google. Those five companies are valued at $3 trillion. It's an astonishing number. It's larger than the 100 largest companies listed on the London Stock Exchange. It's larger than the UK's GDP. And this concentration of power in technology is accelerating. Amazon, for example, has 22 billion of cash. Google has 92 billion in cash. Apple, 250 billion in cash to spend. And that's helped fuel their growth. as they've hooved up nearly 500 companies. Google alone has made 220 acquisitions. And their aggressive approach to acquisitions and their cash firepower really is ratcheting up the valuation of tech stocks in particular. And the ProVen VCTs have benefited from this with much higher valuations. Another market trend, and this is at risk of stating the obvious, is disruption caused by new technologies, which is great if you're a disruptor and troubling if you're a high street retailer like Maplin being disrupted by Amazon. The scale of this disruption is going to continue, and the speed of it is going to continue. And the most obvious recent trend is artificial intelligence, or its close cousin, machine learning. And all of these trends, you'll notice, are having an impact on our portfolio, which I'll go on to speak about. So, portfolio activity this year. The bad news first. We lost coal, or we lost 1.2 million in coal. And we lost 4 million in Maplin, for reasons that I partly explained. But completely compensating for that, we had a fantastic return from Chargemaster, made 3 times our money, or £11 million, and Watchfinder, where we had 9 times our initial investment at 22 million. On the investing side, we made 3 new investments. Mix, which is a company involved in modular furniture, online modular furniture. MPB, which is similar to Watchfinder, but in the camera business. It's a platform for buying and selling lenses and cameras. And Astimos, which is an artificial intelligence business that works with patent lawyers and litigation lawyers. It's a software business. And then we made follow-on investments in my first years, who presented last year. This is an e-commerce business for gifting for 1 to 5-year-olds. Perfect Channel, which is a platform for auctions, provides auctions for people. And POC, which provides apps mainly for e-commerce businesses. I want to move on to people, and particularly to thank Andrew Davison, who started with ProVen right at the beginning of 2000, and for 18 years has chaired the ProVen VCT. And it's a testament to his steadfast leadership that the performance of the fund has become really strong, particularly recently over the last 5 years. Neil Ransom has been appointed to replace Andrew. Neil joined last year, was appointed to the board as a chairman quite recently. Neil was a former partner at PwC, and he led their pharmaceutical and healthcare M&A practice. We also opened 2 new offices in the north, in Manchester and in York. And the rationale for this is to have better access to deals outside the southeast. One of the partners at Beringer, Stephen Tuckley, a native Yorkshireman, has overseen the initiative and recently recruited Mark Sherman as investment director to head up the Manchester office. Mark was co-head of private debt at Musenich before joining Beringer. Beringer now has 25 people managing and servicing the ProVen VCTs, and a dedicated team of 12 making investments. So how did we do over the year? 3 years ago, at the annual shareholder meeting, I said that I felt we had the strongest portfolio we'd ever had. And this has been borne out over the last 2 years as we've begun to harvest some of those investments with strong returns from Thirdbridge last year, Watchfinder and Chargemaster. And as a result, the dividend yield for the ProVen VCT funds continues to be strong. For the financial year ending February 2018, that's the last year gone by, the yield was 15% for ProVen Growth and Income and nearly 9% for ProVen. We've just announced initial dividends for the financial year ending February 2019 of 4.5 pence, or just over 6% yield for PGI, ProVen Growth and Income, and initial 25 pence per share, or 25% yield for ProVen VCT. Now, Stuart, who follows me, will go into a lot more detail on the fund's performance, but these returns put us back in the top quartile for ProVen VCT. I actually believe that now we're ranked as the best performing VCT over the last 5 years by the Association of Investment Companies. And what of the future? That's the big question. Well, despite the dip in markets, we believe M&A activity and strong valuations will hold over the next year. Keen-eyed investors will have noticed valuations have risen on a number of portfolio investments, and we continue to be optimistic at the prospect of achieving further realizations and value uplifts over the coming months. With the realization of these investments and the payment of substantial dividends, as we're often forced into, and we'll go on to explain that a little bit later, we need to replenish the portfolio with new investments. And for this reason, we've announced a joint fundraise for both ProVen VCT and ProVen Growth and Income VCT. Investors can register interest in this offer at the ProVen desk in the foyer, but the prospectuses won't be out probably until mid-December. We've also launched a new prospectus for ProVen Legacy, and we've left copies of the prospectus in the foyer should investors be interested in mitigating inheritance tax. This is a different fund focused on debt and mitigating inheritance tax. Now, to give you more detail on the performance of your VCT investments, I'm going to hand over to Stuart Veal, our managing partner.